Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Alex Harris, founder of Fiat Growth and co-founder and partner of Fiat Ventures, Eddie Behringer, co-founder and CEO of Copper Banking, and Lamine Zarrad, founder and CEO of StellarFi. They join me to discuss how the funding environment has evolved and strategies for startups to survive and thrive in these markets. Gentlemen, it's great to have you with us. Welcome to TradeTalks. Welcome to Market Site. Let's go around the horn here quickly. Alex, starting with you, give us a high-level overview of where Fiat Ventures sits.
Yeah, absolutely. Thanks so much for having us. Really, we like to say we've reverse engineered venture capital, and by that I mean we actually started as a growth consultancy first. We take that operator mindset and we do the ultimate due diligence by working with companies to help understand have they built a fundamentally sound business, and use that to really inform our investment decisions. The opportunity to work with each of these gentlemen at the earliest days, which has really informed the opportunity to invest in them and continue to build with them and help build winners.
So Eddie, tell us about Copper Banking.
Yeah, so Eddie Behringer, co-founder and CEO of Copper. We are the first of its kind investing and banking platform for teens that's truly focused on teaching them about money. So we're a market-leading consumer fintech.
Well, it's good. April's Financial Literacy Month,
That's
so
right.
it's a perfect
It's a
fit
great
for
month
it.
to be doing it.
And tell us about StellarFi, Lamine.
Of course, I'm Lamine Zarrad, founder and CEO of StellarFi. StellarFi is a consumer bill pay platform that allows our customers to link all of their bills to one platform. We pay those bills using our balance sheet capital, meaning our money, and they pay us back, so we create a credit relationship between us and our customers, and now we can furnish the data on bills that historically have been invisible to the bureaus and build credit.
Yeah, let's talk about, Alex, the evolution of the funding environment. It feels like it looks very different 2019 pre-COVID to where it is now, and perhaps for better versus worse.
Yeah, I think in the long term it's for the better. We've really shifted from kind of this momentum investing to being focused on fundamental investing at the earliest stages. So valuations have certainly come down, and the expectations and pressures on founders have risen in terms of we need to show strong unit economics early. We need to show a path to profitability early. And valuations have come down to earth to really price that appropriately, so you don't have some of these overinflated valuations where you have these zombie companies that are never going to live up to that. Instead, you can partner capital and growth together and build fundamentally strong businesses for the long haul.
Right. Well, I'm curious to get both of your perspectives, because it's not your first rodeo. I mean, this isn't your first company that you founded, so how have you seen it, from the first company you found to where we are now?
Yeah, I mean, I think what we've seen more broadly is, everything in the markets are cyclical, and so I think we've seen, this kind of wave happen before. For a consumer fintech company, I think the really cool part about the timing that we're in is it gives you the opportunity to just truly understand what are the problems you're solving for your customer, versus being so focused on driving kind of top line vanity metrics. And so I think for us and others that have been well capitalized, it provides a really good opportunity to continue to make sure we're doing that.
Yeah, and we were talking about that before off camera. How do you get these ideas to just come into your head, or it's actually a problem that you're looking to solve?
Correct. Being a serial entrepreneur, if you will, you kind of understand what works, what doesn't work, and we'd like to think that we saw the writing on the wall when starting StellarFi, and really focused on a sound business model from day one. We focused on a consumer problem. There was a real problem, transcended trends, and thought about how do we make money solving that problem, and I think it's working.
Yeah. So when you think about, Alex, product versus team, what are you looking for when you decide to deploy capital to a startup?
I think the easy answer is anyone will say both.
Right.
But when it comes down to it, it's really founders and the people that we know have the experience, the self-awareness and humility, that people will want to work for them, work with them, build with them, that they have the vision to pivot in a tough market and figure out that they've been through challenges before. There's no straight path. All the most successful companies have had these painful moments, we were talking about this before, of is this gonna work, and this panic, and they work through it. They have the confidence and calm to do that, which is why these guys are a great example of the kind of founder we want to bet on, who are not going to panic in the moment, instead focus on what they need to build a strong business, as you each have.
Right, well, let's reverse engineer that, right?
Yeah,
How important is it to pick the right advisor? And people are putting capital into your company, so how do you interview, how do you select your advisors?
Yeah, I mean, I think for us, when we were thinking about, looking at many term sheets for our Series A, we made the decision to go with Fiat simply because they're operators. And so having somebody that sat in the seat, really, focused on building a company from the earliest stage, I think is rare in the venture capital space sometimes. And so being able to have truly somebody that's in the trenches with you, at least for us, was why we made that decision.
That's interesting, because I would have thought people who are deploying capital would have had that operating experience. I didn't realize it was that rare.
It's quite different. Making investment decisions versus making operational decisions every day, running your business, hiring folks, and so forth. It's critical to have that, as a perspective on your board. And so when we were raising capital, we wanted to have a diversified set of views, and we brought in professional investors. We also brought in operators.
Yeah. We were talking about this as well, data. Everything comes down to data. Absolutely. And how people think about their businesses, the products that they're deploying, but even when you're in the early stages of startup and you're doing your due diligence, data is crucial at that point.
Absolutely. Data is king, and it's I will say that's another shift for the better, where you have, in some cases, we're running experiments and we're like, I don't really know how that worked, and if I measured that correctly. Now the shift has become, you need to build that foundation where you're measuring, so you know where I'm going to put my next dollar is going to be effective. And I will measure and really know my customer, their entire journey, where there might be drop-off, really understand what we should be building and pivoting to continue to build that value prop. And data is what gives us the answers. Instead of debating in a room, that is our source of truth.
Right, and Lamine, you had brought this up before, understanding the customer journey. We can sit here and debate the merits of why you're seeing churn or why they're going into your company or leaving and so forth, but really this helps you to be able to discern those reasons why.
Without a doubt. I mean, when we serve a complicated consumer, meaning that it's an individual and many individuals and have different ways of processing information that we present to them as a company, it's really important to narrow it down using data versus anecdotes, because anecdotes can lead you down the wrong path. And then in this environment where capital is so scarce, you have to be exceptionally disciplined, and data helps you to be maintain that discipline.
How is the current macroeconomic environment impacting? Clearly, the cost of capital is higher, and inflation's higher. We saw the print this morning.
Yep. It's a paradox for us, because we serve a consumer that needs help, and so the more stringent, the more constrained the capital environment is for the consumer, because consumers are borrowing money or they're unable to borrow money, the more valuable we are to them. So on one hand, there's sort of a tailwind for us. On the other hand, the macro factors that affect fundraising certainly affects us as well, and so we have to be more aggressive. We have to be more proactive in reaching out to investors versus 2 years ago.
Yeah. Has the macro environment impacted? Well, I mean, you have a different audience anyway, because you're focusing on teens.
Yep. Yeah, so for us, we're basically onboarding the next wave of consumers to the financial system. And I think the shift that we've seen that's really been driven from the financial markets is understanding money and being smart about it actually now has tremendous social cachet. Whereas when we were growing up, it wasn't cool to be smart about investing, or for better or for worse, the meme stocks craze brought a tremendous amount of attention to really that social cachet around it. And so I think for us, there's been tremendous tailwinds in that you have, largest consumer base that exists really truly wanting to learn.
Yeah, and that consumer base is really interesting. They are much more articulate and inquisitive than I certainly was in my preteens and teens. We speak at a number of universities where they they have financial clubs and so forth, and the questions that they ask are something you'd hear in a sales trader ask their analyst on the sell side. They're very inquisitive, and that comes back to data and really understanding your market. I mean, the point that you made, it's a social cachet thing right now with Finlit. So
absolutely, we talk about all the time what's important to teens, and that's everything from, hey, we want to learn, we want to earn money, we want to have, whether it's even that cachet of having that good-looking card that I can use in front of my friends. I want to invest. I want to actually, for us as kids, maybe it was the newspaper, right? And we were pretending we had that our own sheet that we documented. They actually this generation gets to do it for real now with Copper and other platforms in the space that make me optimistic that the next generation will be better educated and better off than we all were.
Yeah, I mean, and that's really is the goal, right, at the end of the day. We spoke about revenue, we spoke about fundamentals, having proven product lines, ARR, all that good stuff. What about the importance of governance? I think that's a hot topic now as well. You know, being able to thoughtfully answer to a board, to your investors. How has that changed over the past few years with the focus on governance?
Yeah, I mean, I think for any company that's venture-backed, having strong governance culture is really important, and having those checks and balances. I think also really having just a realistic view on, you know, the reality of the market is really key, and that's where governance plays a key part in just making sure that the company is operating in a way that's really taking those realities into an account.
Right. Well, I mean, that also, it goes back to the fundamentals and the revenue. If you have, you know, good governance and you're adhering to that, it's hand in hand.
Without a doubt, and I think in this environment, you need to involve your board a lot more than you would in the past. Historically, you know, if things are going the way you want it to go as a company, the board just is kind of hands off. But now that you're navigating, say, a pretty volatile environment, the board has to be, you know, there along the way, helping you make decisions, and that makes the board exceptionally critical, and who you select for your board even more important.
Yeah, I mean, it's interesting. We cover this topic frequently, and even the composition of the board, for example, more cyber experts coming on as advisors. Alex, are there specific sectors or industries that you look to deploy capital in? What's most attractive?
Absolutely. I mean, at a high level, we're focused on fintech and fintech adjacent. I see there are some verticals that are really undercapitalized right now that are big opportunities. I know we were chatting earlier a bit about how insurtech in the long run will be something that once the unit economics are figured out, once you build sustainable businesses, these are incredibly high LTV products that are fundamental to our system that technology can really disrupt. Same thing with consumer in many ways that has been sometimes depressed because of the capital needed to acquire effectively. You have brands though who are acquiring effectively, the payback period is strong, the unit economics are strong, they've built businesses that can continue to grow and accelerate. And so those are two sectors that not everything is B2B AI. Not to say that that isn't important, but there are these businesses that are still strong fundamental businesses that we look to invest in addition to B2B
Right.
AI. B2B
Well, I mean,
AI
we were talking about that off camera as well. AI is not something new, right? I mean, it's a technology that's existed, let's call it the past 10 to 15 years. It's just that ChatGPT is now part of the consumer vernacular, so everyone wants to learn more, and we've learned how to operate. I mean, even tools at work now incorporate some element of generative AI.
Yeah,
That's true, very true. And I think it's important for investors to be contrarian as well, because a lot of the assets that were overpriced 2 years ago are now underpriced.
Yes.
And so when you're building that portfolio, you should consider that. And so, you know, fintech was this thing that everyone invested in 2 years ago. It's no longer that thing, but it's still there and it's still solving problems and generating very healthy revenues.
Yeah, well, I find fintech so interesting. It's been such a dynamic shift, particularly in financial services, where it's not companies or big banks or big wirehouses telling you this is a product that you need in your portfolio. Customers are coming to you with specific nuances and telling the industry what it needs. Like it's a problem, you need to solve it.
Yep, absolutely. And I think, I mean, for us on the consumer banking front, we've seen that it's just been a push to really innovating not just your product, but your go-to-market strategy, right? Because so much of the business focus now is on unit economics, payback period. And so as we think about how, you know, big five banks have served our customer base or not really served them well for so long, we've really continued to think of how can we be closer to the customer, get to them in a way that maybe nobody has done in the past, which then drives a really low cost of acquisition, quicker payback, and really a lot of what we've, you know, seen to shift within this market.
So let's lift the curtain back for a moment here. When you start a company, is it the same process, the same structure? Is it different for each problem that you're trying to solve? I mean, what do you start? Here's 10 people, let's start a company. What does that look like behind the scenes?
Yeah, I mean, I think, so my co-founder and I have been in the teen and parent fintech space for 17 years, building companies. I joke around that I'm not sure why he still likes me, but we've got very complementary skill sets. I think the problems don't get easier to solve over time, but the distance that you have with your customer definitely gets a lot closer. And so over time, you know, I think it comes down to solving a customer problem. For us, we saw that banks weren't focused on teaching this next generation about money through their first primary bank account. If you're a parent, that seems pretty obvious if you bank at one of these institutions. And so we were just crazy enough to think that we could solve it and really passionate enough to really be there for really that core customer pain point.
Yeah. So when you develop the structure of your companies, Lamine, is it the same formula or is it different for
So there's a blueprint
Right.
for what a successful company should do, but then you adjust it based on consumer. I built 3 companies. 2 of them were in sort of B2B space, and this my last one is in B2C, and it was radically different structurally for that reason, because consumer service required a very different approach, different regulations that sort of govern what you can and cannot do, different partners, different tools, and so you have to consider that, and you have to build a team around those constraints.
Mm-hmm. And this is where Fiat Ventures would come in and help with the distinctions of B2B to B2C.
Absolutely. That's something that there's a different approach to every vertical, and there is that capital efficient approach, whether you are a B2C company, B2B, and really building the right foundation to measure, to iterate constantly, to find your winning value props, your winning customer journey. That is how you become a market leader.
Right. And then of course you have, financial services is a heavily regulated space as well. So I would imagine there's a different, multiple types of advisors that have expertise and consultants within each framework.
It's a reality that we deal with. We say actually that if you can deal with growth in financial services, you can deal in any vertical because it's so regulated, because there's so much compliance. We're seeing that even more and more, challenges with AI even, to have to make sure that that is done in a safe and compliant way in highly regulated industries. So that is really the pinnacle of being able to do this, is growing as fast as you can without truly breaking things. When you say, grow fast and break things.
Right. It doesn't always work that way when you have a regulatory framework, and we're still trying to establish it with AI in the US. And if you're a multinational company, then you have to think about all the other regulations. So let's call it flippant to say just go fast and break things, because you can't sometimes, because you need a framework around it. And even what we're talking about now, because of the evolution of these newer technologies like AI, this could look very different in 3 to 5 years from now. Your platform could be wildly different looking, because of how fast these things move.
Yeah, absolutely. And I think for companies like us, really using AI to really streamline back office processes, I think is the initial no-brainer. And again, it ties to obviously the focus on sustainable unit economics and really profitable growth.
Yeah, and we'll give you the last word here, Lamine. I mean, next 3 to 5 years, it could look very different than the conversation we're having now.
Without a doubt, but we see AI as leverage. So our problem's not going to change. Our solution may evolve in the way we serve our customers, but we're going to be solving the same problem.
All right. We appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.